So we're looking at accounting for overheads today. I'll give you an example of what an overhead is. Let's say, for example, we want to bake bread. We buy flour, we buy eggs. We know how much the flour would cost us, we know how much the eggs would cost us, and you know how many eggs will go into that bread or that cake. So you're able to come with a unit cost. If you bought one egg at 50 cents, you know that 50 cents has been spent on the egg. Then you need somebody to make that mixture of the flour and the egg and the oil. But when that mixture is made, that does not become bread. However, the person doing the mixture, you can agree on how much you're going to pay them. So you know that for their services, for their labor, you pay them $2, for example. So you now know the cost of your materials, which is the flour, the eggs, the oil. You know the cost of your labor, but still that does not make it bread. You need to put that bread in an oven and apply heat to it. But you cannot tell how much heat has gone into that bread. Correct? So if we do not account for that heat which has gone into the bread, then the cost of that bread will be understated. So the cost which has gone into that bread, that heat is called an overhead, because we cannot pinpoint just exactly how much heat has gone into the bread. However, just the fact that we cannot pinpoint how much heat has gone into the bread, if we do not account for it, if we ignore it, then the cost of the bread will be understated. So we have to find a way of incorporating that cost into that bread. So we have to find a way of incorporating that overhead into the bread. That's where accounting for overhead comes in. Okay? We need to ascertain the correct cost for a number of reasons. First of all, we need to ascertain the cost so that we can determine, we can come up with a selling price. Because if you don't know the true cost of a product, then it will be difficult for you to come up with a selling price. If you can't come up with the right selling price, then it will be difficult for you to determine whether you're making a profit or not. So we need accounting for overhead for profitability, for determining the selling price. Also, if that bread has not been sold, you need to record it as inventory. So you also need to know the cost for the purpose of valuing the inventory. So these costs usually are collected on what is known as a cost card. Okay. So the cost card will give you the cost of material, which is going to the product you are making, the cost of labor, any direct expenses, any indirect expenses, so that at the end of it all you've got your total cost. Okay. The cost card is used to collect the unit cost of a product. So if you are trying to find the cost of 1 unit of a product, you're going to collect the costs of the components which are going into that product on a cost card. So you're going to record your labor, how much labor is required to go into this product, and how much the labor is costing you. For example, you may need 3 hours to make a product, and each hour is costing you $7. So it means to make that product you need how much labor cost? 7 times 3 is 21. Then you need the material. The material also on the cost card, you're going to record how much material is required to go into this product. So for example, if a product, 1 unit of a product requires 4 kgs of material. So you're going to record 4 kgs of material. Then how much did you buy a kg of this material? If you bought the material, say for example, at $2, so we're going to record $2 per kg times the 4 kgs required. So you have $8 required to make this 1 unit of a product. Okay? So you're going to do that for every other costs that you need. There's one cost you need to take into account, a prime cost. A prime cost is a summation of all direct expenses. So the direct labor, direct material, direct expenses, when you sum these ones up, the total will give you what is known as a prime cost. Okay? So after the prime cost, then you're going to bring your indirect costs, which are your overheads. When you add your overheads or your indirect cost to your prime cost, you get total costs. So to account for these overheads, we use a process called absorption costing process. Okay? The objective of this absorption costing is to help us calculate the full cost for a unit of output. The objective of absorption costing is to help us calculate the full production cost for a unit of output. So it's a 3-step process, and you need to be conversant, you need to remember, you need to memorize this 3-step process, because questions can come from any of those 3 steps. The questions will come in theory, the question will come in form of calculation. At any of those 3 levels, they may ask you to compute something. Okay? So we're going to start looking at these 3 steps. The first step is to allocate and apportion production overheads to cost centers. Step 1 is divided into 2. Okay? Step 1 is divided into 2. The first one under step 1 is allocate. To allocate is you get the whole cost item and charge it to a cost center. Now, we'll divert just a bit there to explain what a cost center is. In an organization, most organizations, they've got cost centers. Cost centers are those basically departments which are involved, we would say they are core to the business. Okay? Then you've got a service center. A service center is a support. So a cost center will incur costs. It may also generate revenues. Okay? It is core to the business, what you are doing. But a service center will just support the business. You could do away with the service center. Even if you did not have it within an organization, the organization will still function. An example would be a canteen. A canteen in an organization may be just there to provide food for the employees. But the organization may do away with the canteen. Okay? They may even outsource it to another company. Or they may outright just do away with it. Okay? That's a service center. Okay? So, in step 1, the first step in step 1 is to allocate the whole cost item to a cost center. How do you do that? You identify a cost which you can tie directly to a particular cost center. Then you allocate to that cost center. Okay? Then part 2 of step 1 is to apportion. These are the costs which you cannot directly tie to a particular cost center. So you apportion them by dividing them between the several cost centers within the organization.
So you spread them.
Yes, you cannot spread them because you cannot tie the cost to a particular department. Okay, so we're going to spread them. How to apportion them, the question will tell you. Okay, the basis of apportionment. So you find it in the question.
Okay.